Can a university dividend stock actually beat Pag-IBIG MP2? We'll take a look at one of the publicly listed universities in the Philippines and see how much you would have earned if you invested in it 10 years ago, and whether it could actually outperform MP2 by the end of the study. I'm James, and this is episode 2 of our High Dividend Stock Countdown. Today's contender is Central Escolar University, or CEU. Before we jump in, a quick note. I had to remove a few other stocks from the list because they didn't have enough data to cover the full 10 years. CEU's stock price over the past decade has been quite a ride, full of highs, lows, and moments that really tested investors' nerves. If you had invested back in 2015, you would have had a tough ride. The stock dropped for years, hit rock bottom in April 2020, and then just kind of moved sideways after that. But starting in 2024, CEU suddenly came alive. The price rallied hard, recovered its 2015 level by May, and peaked in July 2025. Even after an 11% dip, CEU's share price still ended up over 113% higher than when you started. Now that's what I'd call a major comeback. Now while CEU's price was all over the place, its dividends were rock solid. CEU paid dividends consistently every single year except in 2020. And not only that, the payouts actually increased over time. From a modest 2.7% yield in 2015, dividends climbed all the way to 8.76% in 2025. That's a massive improvement. So let's say you invested 120,000 pesos in CEU back in 2015. Honestly, you'd need some serious patience. For most of the decade, your investment would have been in the red. Whether you reinvested or cashed out the dividends, you'd be losing money for 70 out of 120 months. It took CEU more than 7 years just to break even. Most investors probably would have given up way before that. But those who held on, congratulations, because when CEU finally rallied in 2024, it didn't just bounce back, it exploded. At its peak, your 120,000 pesos would have almost tripled in value if cashed out, and quadrupled in reinvested. By October 2025, here's where you'd stand. 338,970 pesos and 39 centavos if you cashed out dividends, and 474,987 pesos if you reinvested them. Compare that to MP2, which ended up at 204,344 pesos and 236,662 pesos respectively. CEU absolutely crushed MP2, especially in that reinvested setup where it more than doubled MP2's value. Patience, my friend, definitely paid off. Now let's switch gears. What if you didn't invest all at once, but instead added money monthly, the good old cost averaging strategy? Same story at first. The stock dropped, your portfolio was red, but because you were buying cheaper shares during those dips, you actually built up a solid base. By December 2022, your cashed-out investment had recovered. A month later, the reinvested one followed. That's way faster than the lump sum version. And the best part is, CEU overtook MP2 much earlier this time, around July 2023, and just kept pulling ahead. By the end of our study, your cashed-out version would have grown to 371,543 pesos, and your reinvested version would have hit 459,516 pesos. Meanwhile, MP2's returns only reached 161,935 pesos and 171,472 pesos respectively. So again, CEU absolutely crushed MP2. So what did we learn here? CEU wasn't the easiest ride. It tested investors' patience, but those who held on or kept buying through the tough years were rewarded big time. CEU didn't just beat MP2, it crushed it. And that's a perfect example of why long-term investing and consistency matter, even in something as unexpected as a university stock. Now, if you're curious how PLDT stacks up against MP2 over the last decade, check out my video. You might be surprised by the results. If you found this breakdown helpful, don't forget to like and subscribe so you won't miss the next episode in our High Dividend Stock Countdown. Thanks for watching, and I'll see you in the next one.